Home foreclosure filings on the rise, wedding market slows, and a strategist predicts an S&P 500 crash. Hi, it's Edward, back with another video. Please take a moment to click the thumbs up button below and consider subscribing to the channel. Please also share this video with your friends. Thank you for your support. Today, I read several financial news articles. I've included links to the articles in the description below. I encourage you to read the articles to support the authors and news sources. As a private American citizen, I'd like to report and share my transformative thoughts through commentary regarding small sections of these articles that are of public interest. Today, I read an article on foxbusiness.com written by Megan Henney titled, "Home foreclosures are soaring nationwide and rising fastest in these 5 states." The author of this article referenced real estate data provider Adam, which found 32,938 properties in February with foreclosure filings, which includes default notices, scheduled auctions, and bank repossessions. That marks an 8% increase from the prior year, although it is down 1% from the previous month. The good news is the number of foreclosures fell in 28 states in February. However, foreclosures were up 51% in South Carolina, 50% in Missouri, 46% in Pennsylvania, 7% in Texas, and 0.8% in Indiana. Well, my friends, after all of the mania in the real estate market in recent years, I am surprised we are not hearing about more foreclosure filings in the news. A lot of people who bought a home in recent years threw logic completely out the window. Some of the people who purchased a home during the period of artificially low interest rates would likely not have been able to buy a home had it not been for those low rates. I still question how some of these people are going to handle home ownership long term when the financial reality of home maintenance, higher property taxes, and higher insurance kicks in for them. Understand, I'm not bashing these people. I'm happy they were able to buy a home in recent years. Home ownership is often regarded as the American dream. I'm glad people are able to have a place to raise their family. I'm happy some people are in a situation where they may be able to build some equity and realize appreciation over the long term. These are all good things. I just worry that some individuals who thought they had a fixed mortgage payment just because they had a fixed rate mortgage are going to be very surprised if and when they see their monthly mortgage payments increase due to their property taxes going up. The same holds true when they see their monthly mortgage payments increase due to their property insurance premium going up. If their escrow needs to be replenished, their monthly mortgage payment could increase a lot temporarily. It will eventually go back down, but not to the level it was at originally due to the higher property taxes and more expensive insurance. Then there is home maintenance. For example, those who have never owned a home before may have no clue how expensive it is to replace a roof. They may have no clue how expensive it is to replace windows in a home, or how expensive it is to replace the sewer line that runs from the home to the street. A lot of people waived inspections in recent years in order to remain competitive during the multiple offer mania. For those who waived inspections, they may have a ticking time bomb on their hands with regard to home improvements that will be necessary in the future. I cringe thinking about the plumbing and electrical problems that some buyers were completely unaware of. If some of these people are put into a situation where they need to sell their home and move in the future, buyers may not be willing to waive inspections, and they may have to make a lot of repairs in order to get the home sold. If the real estate market cools significantly in some areas, it is certainly possible that some individuals who bought a home recently could be in a negative equity situation and be unable to sell their homes. For some, foreclosure may be the only option if they can no longer afford to own their home, or if they need to relocate for work. However bad this situation is right now, imagine what we might be reading about in the future if and when we enter an ugly recession. I've read about a lot of layoffs this past year. I know unemployment is still low, but that may not always be the case. If we enter a recession and don't have the soft landing that everyone keeps hoping for, more companies could lay off human capital and some individuals may no longer be able to afford their homes, especially those who overextended themselves and rely on 2 incomes to survive paycheck to paycheck. Unfortunately, there are a lot of people out there who have no emergency fund and are stretched thin financially right now. The house of cards could blow over if one of the breadwinners finds him or herself unemployed. Even for those who don't find themselves unemployed, I have to worry about the increased cost of living impacting homeowners who overextended themselves. The cost of just about everything in life has gotten a lot more expensive in recent years. It is a lot harder to use your home as a piggy bank right now due to higher interest rates and real estate values dropping in some areas. I personally know people who have treated their homes as piggy banks in the past to pay for things like a vacation or a new boat. I just have to wonder what kind of foreclosures we could be reading about in the future. What do you think about all this? Share your thoughts in the comment section below. Just a moment ago, I talked about the increased cost of living in America. The next story relates to this. I read an article on CNN Business written by Samantha DeLoya titled, "It's Not You, It's Them. Engaged Couples Are Cutting Back on Lavish Weddings." According to the author, the average cost of a wedding broke $30,000 for the first time in 2023, according to the Wedding Report, a research company that tracks wedding data. After 2 years of elevated inflation eating into consumer wealth, some engaged couples are not splurging for a dessert table or extra flowers. The author also said this is bad news for people who provide videography services, photo booths, and catering. The author also indicated 17% fewer weddings are expected. Well, my friends, I found this to be interesting, and I am not surprised. My heart goes out to people who want to get married but can't afford to have the type of wedding that they want right now, given the high cost of just about everything. My heart also goes out to people in the wedding industry who may be struggling due to less business. Given all of the inflation that has been impacting Americans, we were bound to hear about how some people are cutting back. I have always worried about people who couldn't afford to pay cash that moved forward with financing big weddings. Understand, I have no problem with people getting married. I have no problem with people having nice weddings. I just worry about people who are paying sky-high prices to have a wedding and using debt to cover the cost. Now, you might think this is not the norm and I'm just focusing on a select handful of people who do this. Well, you'd be wrong, at least according to an article put out by usnews.com written by Erica Giovanetti titled, "Survey, 56% of newlyweds went into debt to pay for their wedding." According to the author, U.S. News ran a nationwide survey of 1,205 Americans who got married in the past year with a wedding ceremony and reception. The survey revealed 56% of respondents took on debt to pay for their wedding. 39% used credit cards, 18% used bank loans, and 18% used family loans. Unfortunately, for these people, nearly a third, 31%, regret how much they spent on their wedding. After the fabulous special day is over, the debt remains. Given how high interest rates are these days, some people may struggle to pay off that debt, in my opinion. Starting life as a married couple with a new debt obligation may not always be the best idea. But what do I know? I'm just some guy on YouTube. What do you think? Share your thoughts in the comment section below. I know one thing, even fewer people will be financing lavish weddings if the S&P 500 crashes by 49%. I read another article referencing someone with a stock market crash prediction today. This article was on Yahoo Finance, put out by Business Insider, and written by Theron Muhammad, titled, "S&P 500 is bizarrely overvalued and could crash 49% as recession sets in," elite strategist says. Paul Dietrich, who is B. Riley Wealth's chief strategist, was referenced in this article as flagging the S&P 500's historically high price-to-earnings ratio. He said, "The stock market is basically priced for earnings growth that has only happened 3% in the past, and that percentage has generally happened when the economy was coming out of a severe recession." He also pointed to a 180% plus reading on the Buffett indicator, which suggested the U.S. stock market is heavily overvalued relative to the size of the economy. He also highlighted Berkshire Hathaway's record $168 billion of cash and liquid assets. Then, he cited recent stock sales by Jeff Bezos, Mark Zuckerberg, and Jamie Dimon. I'll share a quote from Paul Dietrich. He said, "I still believe there is a strong possibility the economy will go into a mild recession this year. That means it is possible we could see a total drop from the current overvalued stock market of negative 49%. Well, my friends, here are my thoughts. For every person who thinks there will be a stock market crash, there is someone who thinks stocks will rally higher from where they are today. Keep in mind, there are some people who believe the hype surrounding artificial intelligence will continue to launch stocks higher. And maybe they are right. During the dot-com era, many stocks continued to defy logic for a very long time. Some people believe everything is great because they see consumers out shopping and spending money at restaurants. Others believe we are living in a new economic reality where the Fed will always keep markets propped up anytime there are signs of trouble on the horizon. There have been a lot of people in the media predicting a stock market crash for quite some time. And if they had their money on the sidelines, they missed out on some tremendous gains. Understand, I'm not saying a stock market crash couldn't happen. Anything could happen. There is a lot of debt out there in the world. Many Americans are levered up and struggling due to high inflation and high interest rates. Some companies that flourished during the period of cheap and easy money are now having a hard time due to higher interest rates. We have a potential commercial real estate market crisis brewing. Wages are not keeping pace with inflation for many people. There is a lot of instability in the world right now with what is happening in Ukraine, U.S.-China relations, and what seems like more frequent cyber attacks. It is certainly possible a black swan event could come out of nowhere, but that's always been the case. No one has a crystal ball that is going to reveal what will happen with the stock market in the future. Fear and greed are both powerful emotions that drive human behavior. Right now, greed is prevalent and many continue to drive markets higher. Just keep in mind that fear is often considered to be the more powerful emotion. If we ever see fear take over, I'm afraid the exit doors will be very small and a lot of people may experience a lot of pain. Keep in mind, stocks can take the stairs up and the elevator straight down. Let's hope that does not come to fruition. I hate to think about people suffering. I read some of the comments beneath this article and I found some of them to be interesting. I'll share some of the comments with you. One commenter said, Dietrich has predicted 12 of the last 2 market crashes. Another person said Dietrich's forecast for 2023 was a recession and to not invest in the market. If you took his advice last year, you would have missed the 20% plus run. I thought this last comment was funny. This commenter named Lee said, "Thank you, Nostradamus. We have been awaiting your return for centuries." What do you think about all this? Share your thoughts in the comment section below. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. Check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.